there's still a lot of pent-up demand in the private equity industry, both in terms of dry powder to spend, which is at record levels from an all-time perspective, and in terms of portfolio companies that they're holding that they want to get liquidity on. And so they're sitting there looking for opportunities. And I think there's a little bit of difficulty in pricing transactions in this market, but at the same time, they are finding opportunities. So if you look at the DXC sale of their health business to Veritas, that's a really nice transaction at $5 billion in size. So you're going to see some opportunities like that.
It's interesting to contrast the state of private equity today versus the state of private equity after the global financial crisis was triggered. Today, there will be some, clearly casualties of this environment by sector, but the private equity industry as a whole are already trying to find interesting kind of opportunistic ways to play the downturn, recognizing that it's always harder, to get people's attention. But private equity is going to be a big player probably in the next couple of years in a way that they might not have been in 2008, 2009.
It's a number of factors. It's, when are buyers going to be able to best finance this? Are buyers ready to do a transaction? Are, given the prices on strategics and what's happened to them in the public markets, what's going on there? The other thing is right now, one of the potential exit alternatives of taking a company public is certainly closed.
And that's a really good point.
And that makes it extremely difficult in terms of considering alternatives. We had already started to see over the past year or two that the hold periods on some of these private equity transactions have gone longer, and you're going to see some of that extend further. Now, I think funds that are focused on infrastructure investment are going to see a lot of opportunities. And those are longer term funds. Their return hurdles are lower. They're not as levered when they do their transactions. And I think they're going to be, and they're also assets that are going to continue to be producing assets as we think about it. And so I expect those funds to perform well in this environment as we go forward.
Yeah.
And I think the other trends I've seen recently in the past 12 to 24 months out of private equity that reinforce that is that last year, 2/3 of the transactions that they did were add-ons to existing portfolio companies. And so if you think of what they were doing is they were building up the portfolio companies that they already had. They've been putting in larger equity checks in these transactions than they have historically. And so I think it's been extremely helpful to have healthier businesses than they had where they're in their portfolios in 08, 09.
So they've looked at minority investments. They've looked, as you said, at longer tail investments with lower return thresholds. And I think they will definitely be looking to put money to work, not just in control situations, but sort of backing up, maybe recapitalizing stressed companies.
And you've also had just diversification of pools of capital.
Yeah.
So you've got a lot of the sovereign wealth funds and the pension plans who are both LPs and direct investors and co-investors in a lot of transactions. They've generally, in terms of their LP investments, have gone to larger positions with a concentrated group of private equity firms. And so I think they're, again, all signs that they're much better positioned to weather this storm and, to be honest, take advantage of situations. I think they're continuing to build on some of the existing theses that they've been working through over the past few years, and they haven't let up. I think they're trying to figure out how to price it appropriately and how to get a response from the counterparties, which can be difficult in this environment, but they're ever present to support companies and, to be honest, take advantage of some valuation inflections in the marketplace.
I'd say one more thing about our own institution. RBC really is, in markets like this over many decades, have been very supportive of our corporate and sponsor clients, and we stand ready to help people, and we're busier than ever fielding phone calls about these things because now is the time when when relationships really matter.